Hey everyone, John and Ray here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. And today we're taking a look at the E-mini Dow futures. Now, the Dow in general across the board, not only the Dow, but the S&P, the NASDAQ, they're all catching a fairly strong rally higher. Now, generally speaking, when you're looking at all of the different index markets, they like to kind of stick together. They will split apart, of course, but when all of them are moving in one direction, well, it's pretty tough to want to go against that. Now, yesterday was mostly a range. Not a whole lot of movement took place yesterday, and if anything, we're just kind of arguing over who owns the market. Slight bullish bias, right? A slight bullish bias, but that's about it. Not really much else working its way forward in terms of movement. Now, coming into today, we have a gap down directly off of wedge bottom support. Pretty interesting area to find this kind of bull candle form after that big of a move. And considering that yesterday, not really much is going on, now we're opening up the next day gap down into support. A lot of buyers will be interested in that first bouncing area to keep the market going higher. Now, those buyers, and generally when, you have a first candle type of trade, it's always difficult to jump on board. There is technically a signal there, but not exactly my favorite type, so I'm not including that one in this one, but there will be buyers there because of that. Now, we had a pop higher, immediately filled the gap, and now we're struggling around monthly areas of support and resistance. Last month's open and close all in the same area, and finding the market get really choppy around here. So basically, this area is a no trade, right? We need to wait for more information. We have a pop higher, really weak bullishness in terms of a big wick on the top, maybe a wedge top, it could be. Again, we need to wait for a little more information. The buyers try breaking out, but not really to much avail before they drop right back down, and this is where we start getting information, right? The sellers try driving the market lower, big bear engulfing candle. The buyers immediately fight back. The bears try again, but look how weak this bear candle is before the buyers swoop right back in. And notice what's happening. The sellers are now unable to get back below that falling area of resistance. They can't get back below it to treat it as resistance before the buyers slap it right back higher again. So this one right here, in context, is a nice buying opportunity, even though it's not the best looking candle. Given that we know sellers are probably trapped in this, they're going to be exiting sooner than later. Now, if you didn't like that one, the follow-through bar right here is the clear-cut sign that we are breaking out. So that is also why there is another arrow here. Either one of these, I think, are totally fine in terms of the context. We know sellers are stuck. This is trying to get in early ahead of those sellers getting whipped out. This one is getting in after the sellers have gotten whipped out and using their fuel to add to our fire. Now we continue to drive higher, and like we were looking at, this wedge top is an area to be slightly concerned by. We know that buyers are going to try to get a tap of it. We missed it right here. Weak bearishness off a prior high of day. That's a good buy signal to continue it up one more time, at the very least, to at least get a test of this high. We hit the highs, they try to break through it, and we form a bear candle into a larger bear candle. And notice what's happening, right? Looking at these two bear candles side by side, they would, out of context, if you got rid of everything over here, they would look pretty strong, right? It's okay, well, you've got a bear candle closing on its low, another candle that tried to go higher and turned right back down on its low. But then we step back and say, well, wait a minute. If the sellers were so interested here, where are they? Right? Why can't they get the move to go? They can't even trigger the sellers in below the prior candle, regardless of how strong this looks. That's a big clue. And the lack of the sellers being able to trigger in tells us that there are probably going to be more buyers underneath there, assuming that the sellers aren't going to have what it takes to reverse this kind of a breakout. And sure enough, ended up being a trap and a rally right back up to a new high to finish off the morning session with a beautiful run right back up again. Very strong bullishness coming back in once again on the Dow, and pretty much all the indices following suit right up to a new high. So that's going to do it for today. Hopefully you learned something. Hopefully you found it useful. Great combination of market psychology along with technical analysis to tell you what to do today. As always, if you have any questions about it, you can send me an email and I'll get back to you as soon as I can on those. And like I said, hopefully you found it interesting, maybe useful, and maybe a little bit entertaining. And we'll see you next time.